Hi, this is Dave with Market Trading Concepts. It's Saturday, February the 4th. I just wanted to review some markets now that the markets have closed for the week. And I wanted to look at a couple of new markets and review a couple of markets that we looked at last week. So here's a daily chart of the Dow Futures. We took a trade last week right at this pullback area, and we closed the position out right around this area at the close of the day. And at the time we said, okay, two things might happen. We might, bounce up, or we may come back and test this this support area here, which lines up with this congestion area. So pretty simplistic approach. It's either going to go up or down. That's pretty obvious. But from the perspective of the markets, what we're looking at is a potential break of this resistance area that we've identified going back in the past. Now, I was talking to another investor trader on Thursday and Friday of this week that just passed here, and they were basically telling me that they were short in this area somewhere around here. Let me just change this so that it's consistent. They were short somewhere in this area here. So from a psychological standpoint, if you think about this, basically what they were telling me was, I'm short in this area here, and they were riding it down here, right into the area where I was looking to get long last week. But now they're still in the position. So from a psychological perspective, if you shorted at that area there and you're still in the position and you know that you've got resistance, I mean, this is clearly defined resistance right at this level. You see we just probed above it on Friday, but we closed right close to the top of the range and almost right at this 12,800 resistance level. So a couple of things could happen. You could be sitting there saying, okay, well, I'm going to get out at the end of the day if it closes there, and you close out your position and, no harm, no foul. But what also might happen is there's probably going to be a lot of stops up here for people that are short. So for people that are short up here, you're going to get a situation where they've got their stops above clearly defined resistance here, and then you may even have breakout traders that want to buy up in here as well, if the price breaks this level. So you've got two types of traders here. You've got the ones that are short here that tried to catch the top and did so successfully for a while. And they've mitigated their risk, or they've clearly defined their risk with a stop above here that perhaps haven't closed out their position yet because we didn't actually get a close above that level. And then you also have fresh buyers coming in here saying, well, I'm going to take the breakout if this goes higher. So what might actually end up happening next week going into Monday is you could get a bunch of orders get triggered up here where you get, a bunch of buy stops for the fresh longs that want to get in, but you also get, people that were short here getting, their stop orders triggered where they have to buy back their positions, which could lead to some volatility and a blow off higher. So that's a potential, scenario that I'm looking at. Because you can only knock on resistance or support so many times, and it's either going to fail or the opposite's going to happen, which based on what I've been hearing in the market, there's a lot of bearish sentiment. That would be the upside surprise, and that's where I'm more leaning towards. I'm more leaning towards the market going higher. If we take a look at the market from the perspective of another setup that I look at, the Darvis squeeze, which I've talked about in other videos, we're back here at resistance on the weekly chart. We have potential targets of 14,000 still on the Dow Futures, and I think that's still 13,000 to 14,000 I think is still achievable. I'm still looking at those upside targets because you've still got, let me just change this, you've still got you've still got the trend intact And there's that old saying, the trend is your friend until it ends. And, not to throw too many cliches around, but, it's true. You've still got, you still have bullish indications here on the weekly chart. There's no reason to be short, in my opinion. We're just testing resistance, and I think that, we could have a push higher because that would be the upside surprise. On the daily chart, you have a situation where, you've got, you don't have any fresh buy signals, and you have a little bit of a divergence here on this pullback, which lines up with this pullback level here. So the MACD hasn't crossed higher again, but you've still got, you still have bullish indications here. This is a minor divergence, but you're basically good to go higher, and I think that would be, the upside surprise would target somewhere in this level here. And if I just throw on a drawing tool, horizontal line somewhere, potentially 13,364. So I think we're going higher. I don't know exactly where we're going to, but in my opinion, I think we're going to test some higher levels there. Now, I just want to take a quick look at the the sister indexes, the sister markets, just to see what's going on here, if there's any clear divergences or anything like that. And looking at the E-mini futures, we still have some healthy upside there, both on a daily and a weekly basis, by the looks of it. So we have 13,391 potentially to 1,500, potentially, and all indications still look bullish from what I'm looking at here. So taking a look at the Nasdaq. Yeah, see, the Nasdaq has it still has quite a bit of movement in here. You had a one dot squeeze fire off, and you have potential targets of 28.93 on the Nasdaq futures, and there's no reason to be short this market, in my opinion. So as far as I'm concerned, what I'd be looking at from my perspective is I'd be looking at this resistance level, maybe to get a clean break above this level and then buy the next pullback. So what I mean by that, and I apologize for switching up the charts, but in my analysis, I do look at different types of charts to get different perspectives. So I look at this type of scenario, which is a more of a mean reversion pullback type strategy scenario, and I also look at this scenario, which is the Darvis squeeze, which is more a breakout momentum type strategy. So I do look at both of those perspectives. So looking at this perspective here, I'd be looking for either failure of this back down to test support, or a clean break of this level, and then either a pullback to the breakout level, or I'd be looking at this kind of scenario here where we do one of these things, we come back and test this breakout level and move higher, or where these kind of catch up and we test this these dynamic support levels, and then we push higher. So that's at this point in time, until we get a solid close below these key moving averages, a key 20 period exponential moving average, 21 period exponential moving average, or below this breakout level, until we get a clean break of that, or we have some indications here that tell us otherwise, I'm still bullish on this market. Now, I wanted to have a look at some new markets that I see setting up that I haven't really talked about before. I'm looking at some of the key currencies. Now, I've noticed a couple of signals that are setting up in the, for example, in the Aussie Dollar currency futures. And I mean, you could look at this in the forex market. You could look at it, with the FX series of ETFs, which is probably how I'll be playing this. I like to look at the futures market, and I like to take positions in, ETFs. I don't really trade the forex at this time, but there are, the futures are highly leveraged. So what I'll typically tend to do is, in order to mitigate my risk, I'll take a position in the FX. I believe it's the FXA, which tracks. Here it is. Here, the currency ETF. So you have the FXA, which is for the Aussie dollar, FXB, FXC, British pound, Canadian dollar, euro. I believe this is a Swiss franc, and I could be mistaken here, but these are the ones that I trade the most when I do trade these. And what I mean by that is, I'll trade these when I see something from a macro perspective that's pretty key setting up. And what I see in this is we've got a fresh Darvish squeeze signal on the Aussie dollar. So we have a break of this level here of the Darvish box, and this Darvish squeeze set up here, which fired, this is a weekly chart. So here's the signal here. And I like to look at this radar screen because it gives me kind of a bigger overview of things that are happening here that I might not notice unless I study the charts. So looking at this, you've got this breakout signal long at 105.91. We're at 107 right now, so we're a little bit extended. I noticed this setting up, as it was breaking out, but you can take two approaches. You can buy the breakout, hoping it goes higher. You could wait for the next pullback. So I opted to wait for the next pullback. And looking at this, you've got bullish indications here. The MACD is crossed over, and your trend is long. Looking at the daily chart, you've got a similar situation, where everything seems to be intact and going higher. And that's been going on for, many, many days now. So from this perspective, I wanted to highlight something that is something that I noticed in my market studies. And what that is for people that are familiar with William O'Neill's work, the Darvish squeeze is something that I have kind of dubbed, and I've kind of put together through different things that I've learned from different people and different techniques in the marketplace. But there's really nothing new in the market. And one of the things, what I mean by that is, one of the things that I've noticed about the Darvish squeeze, just kind of veering off from this market analysis, is if anybody is familiar with William O'Neill from Investors Business Daily, he's an icon in the industry. He's well known in the industry. He has a pattern that is talked about, and I never could really see these cup with handle patterns or these cup patterns. But one day, as I was going through an analysis, my own analysis of my Darvish squeeze signals, and I used to subscribe to Investors Business Daily newsletters, various services, and they would have these stocks that are breaking out, and they would say this one has a cup with handle pattern, and what I started to notice is a lot of the stocks that I was screening with my own Darvish squeeze setup would come up in Investors Business Daily as well. And one of the things I started to notice is, if you look at this, if you want to consider this a basing pattern, this looks a lot like a cup. If you just kind of draw the line, draw the cup in here, you get a high, you get a sell-off base, and it kind of cups back over and it forms your cup. Now, William O'Neill talks about a cup patterns and cup with handle patterns, and the handle is this pullback and then a resumption higher. So in Investor Business Daily, or in Jim O'Neill terms, William O'Neill terms, you basically place a buy stop a little bit above the edge of this handle pattern, that confirms the breakout after the pullback. So I started to notice a correlation in some of my own studies, and something that I had studied a long time ago, but I could never really see or comprehend. And I think there's something to that correlation. I don't want to say definitively there is, but in my experience, one day I just kind of had one of these aha moments, one of these epiphany moments, where I was like, saying to myself, wow, that looks a lot, like a cup and handle. And I seem to be getting in my own screens a lot of the same signals is Investors Business Daily is getting in some of their screens. So I kind of, I just looked at this and said, I wonder, that looks an awful lot like a cup or a cup with handle. For certain markets, like, for example, let me just clear this off the screen. If you look at the signals that we had on the Dow Futures, one of the things that you'll notice here, for example, this signal that I've been looking at for a while, this Darvis squeeze trade that I was looking at for the Dow Futures, and that I've talked about in other videos. One of the things that you notice is, I mean, this is kind of a sloppy cup, but you get this. If I can be a little bit creative in here, you get this kind of cup, and I don't know if the criteria for the length of the base is really long enough, but then you get this pullback, and this is a pretty deep pullback, but you can kind of imagine these wider basing patterns where you get that pullback and then the breakout again, and this would be your go with. So you can kind of see a correlation between the two of those, and at times, and I just thought it was interesting to note and wanted to share that with some of the group members that I'll be sending this out to. Now, just trying to get back on task here, looking at the Aussie dollar again, we have this this fresh Darvis squeeze on the weekly that's just fired off within the last 2 weeks. And I'm looking at this as a potential trade, and from the perspective of where to enter this trade, it's a little bit extended. So what I'll probably be looking at, I'll be studying it more. I'll be looking for a pullback somewhere back into this area, the breakout point, or the ideal entry would be a pullback, the first pullback to the 21 period EMA on the daily chart. That would be a fantastic entry point, and it will be something that we may or may not get for quite a while, if at all, depending on how strong the market turns out to be. So I'll have to kind of assess that going forward and say, okay, where am I willing to get into this? Where is the lower risk entry? At this point, I'm just recognizing there is a signal, and we have potential, for upside somewhere up into this level here, which is, let me just clear this off. If we project the width of this box outwards, it's 119.84. That's a pretty significant move. That's almost a $14,000 move in the futures market. Now that is a little bit too leveraged for my liking. I would never trade this in the futures market, because you could get one decent pullback that could blow out your position, and you could take a lot of risk on that. So from that point of view, what I'd be looking at is an entry using the FXA, and I'll probably use a method that I learned from John Carter using options. John Carter from Trade the Markets. I'll probably use his Delta 70 approach, where he buys an option, let's say a call option. Once it pulls back to a key level, I'll take a directional trade using a Delta 70 call option, and I'll probably go, because this is a fresh squeeze, I'll probably want to be in the position, anywhere from 1 to 2 months. So I'll probably go 1 to 2 months out, and I'll look for that Delta 70 option that retains the Delta 70 once it pulls back to my key level, wherever that level actually ends up being, because I have a couple of levels in mind at this point in time. Now, so that's the Aussie dollar. Of course, you could trade that. For those who like to trade Forex, can trade that in the Forex market. There's a number of ways to trade it, using different instruments, different market approaches. Now, just having a look at the Canadian dollar. The Canadian dollar had a, let me just grab my pen again. The Canadian dollar had a Darvis squeeze fire off on the daily chart, where it broke out, pulled back, and moved higher. Okay, so that's a pretty decent move there, and you can tell, we have all indications are bullish. the squeeze fired off to the long side. MACD crossed higher. You've got my trending indicator higher. Break of resistance with volatility coming into play here. The Hakanashi is bullish. Now on the weekly chart, you can see we have something setting up on the weekly chart as well, where you have a situation where these indications are starting to come together, and this is still negative, but it's losing momentum to the downside. So at some point here, I'd be looking for it to break above the zero line and turn blue and start moving higher. Now if I zoom out a little bit here in terms of where the Darvas box high and low is, what I'm looking at here is, let me just draw a horizontal line, and I apologize for the length of this video, but it's hard to explain some of these things in a short amount of time. So let me just let me get my drawing tool here and draw a horizontal line. Here's the top of the Darvas box. So we're testing that resistance level right now. So what we're looking at is we have this Darvas box. It hasn't fired a signal yet, and that's why you're getting you're getting a heads up here that there's a potential breakout here, and these things are starting to come together. So I'm a little bit hesitant about taking a trade while this is still negative, but it is coming up close to the zero line, and I mean within a week or two we could really have an indication this is going to go higher. We already have the lower time frame daily chart firing a signal. Intraday we had a 60-minute chart which fired a Darvas squeeze. We had a failed Darvas squeeze short, which is a good sign that you don't want to take these short signals when your higher time frame is bullish. So what you can do is you can ignore these kind of short signals and just take the long signals, and you can see you had one workout on the 60-minute chart on Friday. So when you kind of put this together, and I think of this as you're a detective looking at all the clues and trying to reach a conclusion based on what you're looking at. I'm looking at a break of this level here, an initial break, for it to come and test it again. It's possible that it could just keep going, but I'd be comfortable at this point in time buying the first pullback to the 21 period moving average. I like that. That would at this point would line up somewhere close to this breakout level. Although this could, if this happens later on, the dynamic support level could be appear somewhere, and I'd be okay with that because we haven't touched the 21 period moving average in quite a while. But this is what would confirm my bias for a much bigger move. That's why I like to look at these weekly charts, because if we get a signal on the weekly chart, those are pretty substantial and pretty major moves. They are potential trend changers. And what I mean by that is, we have the Aussie dollar already signaling strength to the long side. The Canadian dollar is looking that way as well. Let's take a look at some of the other currencies and see if we can see a theme going on here. If we look at the British pound, for example, now the British pound it's pretty sloppy. It looks like you can in the short term at least draw a downtrend line here, and you can see it broke that, and we have bullish indications across the board on the daily chart. On the weekly chart, let's see where the high and low of the Darvas box is. You can almost see this, a bit of a kind of sloppy double bottom pattern happening here. We have bullish indications. We're going into a squeeze, which means we could return to volatility. The MACD is crossing over higher. Okay, the MACD is crossing over higher, so that's another bullish indication. But we still have our trend lower. It's losing a little bit of momentum, but this is that's not bullish. If we get up to this level here, which if you look at the range of these bars and you kind of project it forward, you could see, like, let's say we started to creep higher, this might have the potential to roll back up to the upside and start turning blue and doing one of these things. So you have a potential move. We're close to the middle of the range, so this is, this is not an actionable level, in my opinion, for a bigger move. This is not an actionable level, but when I look at the evidence, if you will, in front of me, we're above the 20 period, 21 period moving average on the daily chart, and we haven't touched it, in many bars. So a pullback even to this level, should be met with some kind of buying, should be met with at least a small bounce. Now we've got a close. We had a close right at the 21 period moving average. We had a close above the 21 period moving average here on this week, at the close of this week. So that is, in my opinion, is a potential shift in momentum from, from a short bias to a long bias. Now, it's not necessarily at a safe entry level, and it hasn't signaled some huge macro move higher, but I wouldn't want to be short. Let's just put it that way. I wouldn't want to be short the British pound at this point in time. If we have a look at the yen, we have a potential breakout signal here. And this is interesting. So we have a potential breakout signal. Now, this is a real-time indicator. So this will update. Let me just highlight this. This will update as the levels and the condition changes in the market. But if you look at the charting indicator, it's actually at some point it probed above the top of this Darvis box and signaled along. Excuse me. When it broke above this, it printed on the chart, and it will maintain that history. So we have a potential move higher in the Japanese yen as well. So what does that mean for currencies? I mean, generally, what you have is most currencies move opposite of the U.S. dollar. I mean, that's a generalization, but it is. I think it's a pretty accurate one. You get a lot of the major currencies. I think the euro makes up almost half of the U.S. dollar index, and I don't know the exact figures. But let's have a look at the euro just to kind of wrap up whatever conclusions we might be trying to draw here. But basically, I'm leaning towards, at this point in the analysis, I'm leaning towards, we have a situation where the U.S. dollar was going higher for a while, and now these other currencies are going higher. So does that mean the U.S. dollar is going to go lower? Now, if I look at the euro is not very clear. We had a break of the Darvis box here, but if I can just look at a couple of things here, we have here's your 21 period moving average on the weekly chart. You had a close above the 8 period moving average. This was a pretty substantial week. You have potential signs of accumulation in this tailing bar here. You're above the 21 period moving average on the daily chart. Just from that perspective, I would not want to be short the euro from a swing basis. Once you start getting closes above the 21 period moving average, like in here, I might not necessarily want to be long, but I definitely wouldn't want to be short. So I would say this is kind of a neutral bias. If you look at this kind of sloppy trend line here, you've got a break of the downtrend, and then that is followed by this close above the 21 period moving average. I wouldn't want to be short this at all. You have bullish indications here, bullish indications in the momentum. The MACD's crossed higher, and now this is still red. This is still red, but now it's coming up close to its zero line. If we start seeing this situation here, I mean, that would definitely confirm that we could be heading higher in the euro. Now at this point here, we still have resistance at this level here. You can see this. It confirms with some price going back several weeks. You have kind of a confluence in these levels, but I think that this is kind of I think this level needs to be tested somewhere in this level here. I think that's in the cards. And we have obviously a lot of resistance overhead even here, but I think that a test of this level, I think it's doable. And I mean, what does that mean for the U.S. dollar index? For the U.S. dollar index, I think what that means is, now I'm on delayed data here on the U.S. dollar index, but I think because the markets have closed and everything, I think we're pretty good here. Now you've got this kind of trend line here. You're kind of at the line in the sand here on the U.S. dollar index, where you're at, this is the weekly chart, so you're at 21 period moving average support, which is pretty major support level. But what you've got here is a situation where it's touched it here, it bounced off of it, and now it's kind of finding resistance at the 8-period moving average above it, and it's kind of caught in between, these two key moving averages at trendline support, at 21 moving average support. Now, it's not uncommon for a situation like this to happen. I've traded the US dollar before using, the UUP ETF, and it's not uncommon for it to slip below like these key moving averages. So I wouldn't be surprised to see something like this, where it comes down and it tests this, but it slips through, these key moving averages, and it kind of freaks people out and it stops people out. I wouldn't be surprised by that at all. But looking at the evidence in front of us, you have a negative here on the Hakanashi, declining momentum. You're kind of at an inflection point here on the MACD where this could kind of bounce off, or it could go lower. So you're not really at a conclusive entry point. Your macro trend is still higher. So from that perspective, I wouldn't want to be short the US dollar, but I don't think I'd want to be long it either until I saw signs of strength on a lower time frame, kind of pushing higher in a definitive manner. I'd want to catch it on the way back up. I don't think I'd want to try and find, where exactly is it going to find support, because I don't think it really respects support and resistances as well as some other things do. Looking at the daily chart, this is all negative. This is negative. This is negative. So, I wouldn't want to be shorted. It's below the 21-period moving average as well. I mean, you could, it's finding support, and it's, in this price action here, the bottom of the Darvis box, and you've got some congestion in here. It could easily come up here and roll over, and or it could, it could easily find support here and move higher. So what does that mean? In English, from my analysis of this, what this means to me is, there's no real clear direction here, and I think that there's a lot of easier markets to try to peg in terms of taking an actual trade here. I wouldn't want to risk real money on this trade. I don't think it's clear enough. But when you look at the other markets, and you put that into context, they're starting to show signs of strength. And normally what I would say is, like when I look at, just jumping back to the Aussie dollar, normally when I see this kind of basing pattern in a weekly chart and a fresh squeeze signal, fresh Darvis squeeze, typically you're going to have movement higher. These things can and do fail, but under this circumstance, I would expect at least some movement, some movement higher here, which to me would mean the US dollar is probably going to go a little bit lower. I think the euro needs to come up a little bit and test that 21 period moving average on its weekly chart. I think that's in the cards. So I think you're going to see a little bit of euro strength and strength in other currencies, and I think you're going to see a little bit of weakness in the US dollar. Anything can happen, of course, and we're not here to provide advice. This is more for educational purposes and for just general market discussion purposes. But that's what I see from the evidence shaping up in front of me. Now, one more market. I know this video's we're at about 33 minutes now, so it seems like I just can't stop talking today. But one of the other markets I want to just quickly look at, and by quickly I mean quickly for me, I want to have a look at the gold market. Now, I know you're in here somewhere, gold. There you are. So let's take a look at the gold currency futures. Now, I was looking at this earlier in the week, and a couple of things I noticed here is we have a potential breakout signal on the Darvis squeeze on the radar screen, and we have this trend line, this downtrend line on the weekly chart, and you can see here we made a lower high. We found some support in here, some accumulation in here. We bounced higher. So this is a weekly chart. Now, what I'm noticing here is, and this is something that I kind of wanted to highlight too. Here you have a Darvis squeeze short signal that failed. And it's not surprising really that it failed when you look at, you're still bullish here, so you don't necessarily want to take these short signals. But you're bearish here, okay? You're bearish here, you're bearish here, and you're bearish here, but you're still bullish here. So you don't have kind of everything in alignment. Now, when it came back up to this level here, which might, you get a short signal here, you might say, well, I'm going to take a position here on the retrace. Instead of trying to catch the breakdown, I'm going to let it retrace, short it here, and move lower. Now, this was a point I was actually looking at shorting in here and here on the daily chart as well. And see, you had like a reversal, potential reversal signal here. But what you started to notice was when it got to this level and it looked like it was going lower, this was a potential entry with, obviously managing your risk with a stop somewhere in here. I didn't take this trade, but you could have actually, once it closed above the 21 period moving average here, to me, all bets were off. I mean, I didn't want to be short. I wanted to wait for next steps. So I didn't take this trade. I wanted to actually short it at this level. Luckily, I didn't. I would have lost money on this trade because everything was looking good for a short. When you start looking at these things. At this point in time, this was rolling over and close to the zero line. So, you could kind of sit here and say, well, oh, this is going to turn red. And if this did go lower, that definitely would have turned red. But now what you have is a situation where you're in a sort of a quiet period, but you're going to return to volatility at some point here. Now you're getting some bullish indications. This is potentially going to move higher. This is starting to roll higher. On the daily chart, this rolled higher at this point here, somewhere in here. So, at that point you're saying, well, I don't know if I really want to be short if you didn't already take a position. This is bullish. This is now bullish. This is bullish. This is now bullish. Your trend is now bullish. So when I look at this, I say to myself, okay, we're at resistance, but now we've got a nice little kind of uptrend on the daily chart, which is testing resistance, price resistance, Darvas box resistance. This is some obvious resistance. And what I'd be looking for, and what I've seen before in the past, is, you got a break of this trend line here on the weekly chart. You're kind of in the middle of the range here on the weekly Darvas box. So I'm not expecting any humongous, trend changing moves. Like if this were to come back up here and put in like kind of a double bottom and then come back up here and break out, I'd be saying, wow, we've got some big move in gold pushing higher. We're going to hit like, we're going to move at least $200 an ounce in gold, maybe $300-400 an ounce. But at this point, I'm just looking at a nice little minor trend in place here at resistance. I'm not expecting it to really break above here. What I'm really looking at is a quick rapid pullback down to this 21 period moving average, where I'd want to try to better time an entry here at the 21 period moving average and at least expect a little bounce higher, at least 50% of this move. So, if you could imagine here, I'm looking at, like, let's say this coming down here and getting a bounce somewhere up to that level, and then this would be the safe entry, and this would be, a modest target, and just cutting the position. Now, my own personal bias is I think gold's going higher because everyone else is expecting it to go lower, and I think that would be the upside surprise. The other reason why I think that is if you look at the macro trend is definitely higher. And if you look at these other signals in gold, these other Darvas squeeze signals, let me just clear this off. Going back in the past, you have, and I traded some of these, you had this signal firing here. Now these are weekly charts, so these are fairly big moves where they move a couple $100 an ounce. Excuse me. And you had, like, for example, this signal fired, hit its target. This signal fired, hit its target. Okay, this signal fired, hit its target. Now these were trades that I just got into as soon as the signal fired, because if I waited even for the first pullback, decent pullback, I would have missed these trades, because gold is more a momentum market. When it goes, it just tends to go. This signal fired. Now you ignore these short signals here because your trend is higher. Okay, your trend is higher. You get these these weekly squeezes firing in the direction of the trend, those are the ones that you want to take. But there, no market goes obviously straight up or straight down, so you're going to get these ebbs and flows and these pullbacks within the context of the larger uptrend. So this signal fired, hit its target, it even blew off and went higher. These are pretty significant moves. I mean, this is a move of $1,447 per ounce to $1,528 per ounce. It's a tradable move. It's a decent move. Now here you didn't have a signal, but it kind of blew off and hit this sort of exhaustion top, and this minor downtrend started to form, although we didn't get really we got a lower high, my bad. We got a lower high, but we didn't really get much of a lower low here. And when we didn't get this lower low here, I mean, you don't really have the makings of a real downtrend. You have, you have one. Here's, if you imagine this is like a stair, so you've got a stair step that didn't actually make the crux of its stair. It didn't make a lower low, and now it's moving higher. It broke above this resistance level that probably a lot of shorts got blown out at this level, I would imagine. Probably a lot of shorts got blown out here, which is why you had this fairly, not super wide range bar, like not compared to this or this, but you had a fairly substantial move higher, and now you're kind of into a doji here, a little bit of indecision or pause. So from the perspective of this, you're in the middle of the range. This isn't very actionable in terms of on a weekly basis, but now just jumping back to a daily basis, again, what I'm looking for is maybe a quick rapid pullback to here, just for a short-term trade, anywhere from 1 to 5 days. So that's what I'm looking at in the broader markets. Again, these aren't trade recommendations. This is just kind of what I'm looking at, what I see shaping up in the markets right now. I think we have some pretty substantial moves in currencies setting up, and I think they're tradable. I'm going to be looking to take a long entry either in the Aussie dollar or the Canadian dollar. Once I kind of nail down a better level, a better pullback day, I'll be looking to see if I can get into those positions for a mini swing trade anywhere from, depending on how it reacts once I get into the trade, but anywhere from, like a week to, under less than 2 months, basically. So that's what I'm looking at. I hope it helps. I hope everyone has a great weekend. We're going to be setting up another meetup for the end of February. So we have these special interest group meetups through the Burlington Investment Idea and Active Traders meetup group. You can find us on the internet. I'll try and put a link in one of the upcoming videos. And we just get together and we talk about the market. So one of the members has suggested that we just talk about different investment ideas, not necessarily trading ideas. There's a lot of people in the group that are interested in real estate, that are interested in alternative investment ideas. So I think that would make a fantastic topic for the next upcoming meetup, and I'll be scheduling that meetup this weekend, and I'll be sending that out to everyone that is a member of the site. Now I'm going to pause the screen and pull up the site here so you can actually link to it. You might want to join it if you're in the in the GTA or the Niagara area in Ontario. We're in Burlington. We have the meetings at the Market Trading Concepts trading facility here in Burlington. Let me just pause the screen and I'll pull up the site so that you can have a look exactly where to go. Okay, so here's our website, and on the front page of our website there's a link here called Meetup, and it says meet other trading peers and pros in the area. So this is a group that that we're involved with. That if you click on the link here, we'll take you over to for those who are familiar with Meetup. We have this group here called Burlington Investment Idea and Active Traders Meetup. There's some of our members here, but you can come over to this link here. There's no charge to belong to the group, and the meetings are free. They're just a way to connect with other traders in the area, and to other traders in the area and other trading professionals, but mostly just other people who are interested in investing and trading in for their own accounts. And we get together as a special interest group just to talk about trading and investing ideas. It's a great group. We usually have at least 10 people come out to the meetings. If you want to join the group, what you can do is now there's no upcoming meetups until I actually schedule the next one for the end of February, which I'll be doing this weekend. But if you can come over here, and if you're actually logged out, if you're not a member already, what will happen is sorry, I had to pause the screen there, and so as not to waste even more time. So what you can do is you can find the group on Meetup, and you can just click on this link here that says "Join Us," and that will take you to to a sign-up page where you can join the group. You'll be given updates once you actually join the group and fill out the necessary information, either for our group if you're already a member of the Meetup site, or you'll have 2 levels of opt-in where you'll have to sign up to the Meetup site and then sign up to our group or any other group that you might want to belong to on Meetup. It's a great site for organizing events and getting together with people that have the same interests as you do. And once you sign up, you'll be given updates as to when we're having meetings, etc. So I hope that's helpful. I apologize for the length of the video. We're coming on 45 minutes or so now. I'll try to keep future videos a little bit shorter, but I just wanted to highlight, for those who are in the area and want to get together with us once a month, with myself and the other members of the group, just to talk about investing and trading. This is a great way to do it. There's no charge. We're not really trying to sell you anything. We're just trying to connect with people that are like-minded in the community. So we'll look forward to seeing you out at one of the future meetups, and we'll look forward to hearing from you through a number of different channels that you can reach us through. Thank you, and have a fantastic weekend.